Hello everyone, we are live from Chicago. Today is Thursday, January 16th, third Thursday of the month. I'm Charles Brown, Portfolio Manager with CB3 Financial. We are glad you are with us, 1 week delayed. I'm very sorry I had to miss last Thursday. You would not have been able to hear me. My voice was totally shot from this virus going around. Haven't been that sick since December 1996, but I am definitely back and ready for tonight's show. We're thrilled you're here and we hope you enjoy what we have for you. The art of the deal. It's a new presidency in just a matter of hours. And what does that mean for you and your money? We're going to talk about that. If you're new to the program, please subscribe to us on YouTube. Click the little bell so that you get notified whenever I go live or whenever we upload a pre-recorded video, which we do from time to time. Follow me on Facebook, which is Meta, of course, X, LinkedIn. We're there every single day, and also we are podcasting, which we'll show you in just a minute. These are the topics for tonight. Really going to make it pretty narrow tonight. It's going to be a review of 2024, and then a whole lot of the time is going to be on U.S. policy for obvious reasons. All right, so the podcasts are now a half a year old. You guys have been faithful watching or listening to those. Appreciate that a lot. Let us know what you're liking about those and what you're not. CB3@CB3.com, or when we send the survey on Monday, feel free to comment not only on the show, but on the podcasts or on the tweets, anything. We're trying to reach you guys once a month with video, once a week with audio, and every single day, 365, with material that you can use on those tweets. All right. The next show, Thursday night, February 13th. That's the first one with the new president, and it should really be interesting. So what about 2024? This will be the last time we touch on it. The U.S. economy absolutely defied expectations in 2024, outperforming all of our G7 peers. You're going to see that despite the fact that we had a divisive election, elevated interest rates, and a cooling labor market. Now, we didn't go backwards in the labor market. We still had positive job growth, but it was definitely cooling down from the 300,000 jobs down to the 170 to 180 range. All right. When it comes to stocks, Wall Street analysts got it wrong again, predicting another mediocre year. And here the the S&P surged by 25%. The Dow not as much, but the S&P 25%, 2 years in a row, more than 20%. Hasn't happened in almost 30 years. Okay. Very few people are calling for an end to the rally, mainly because of everything I'm going to show you tonight. I am in that camp. We didn't start really well this year, and December finished on a weak note. CG was down 5% for December, the worst December we've had in 6 years. 6 years. Don't think that's going to deter us because the rest of the year was so strong. So where do we stand versus the rest of the world? The S&P's in the upper left-hand corner. It's the best looking chart on the page. FTSE is England, hardly anything going on there. Shanghai, Shenzhen. Obviously, the China market, very volatile, did pretty well. Hang Seng, also a China market. Topics, Japanese market, and the stocks, which is Germany. You can see we're clearly the strongest performer, and you'll see more stats on that tonight. And it wasn't just the stock market, okay? The U.S. economy demonstrated astounding resilience despite slowing growth rates. Inflation eased. It's still not where we want it to be, and labor market conditions remain stable. So when things are boring like that, the markets like it, all right? And the Fed was able to back off a little bit and say, you know what? We think we're seeing the end of this aggressive rate hikes, all right? And they're swinging to cuts. So in the chat, Keith asked if I'm done yet. I don't think I'm quite over this. In fact, I'm going to have to mute my mic and cough. So give me 6 seconds here. This is a very persistent bug. We've seen people sick 2 and 3 weeks. I never missed a day at my desk trading, but I just didn't have a voice. I would have been whispering like this, and maybe you would have preferred that. If you put that in the chat, you won't break my heart. I'll get it. So, and hello, Fran. Glad to have you on here from the warm Sunshine State. Consumer confidence reached a 37-year high. Now, why did this happen? You can speculate any way you want. Was it the election? Was it all the other things that are happening? The fact that the economy and the market continues to succeed, even with so many headwinds, maybe that's the reason for consumer sentiment rising to that 37-year high. But what that means is it's good for us in the economy. 67% of our economy is consumer cyclical driven. In other words, people spending money on stuff. Now, bankruptcy filings rising, declining retail sales. Mostly that's brick and mortar, though. I don't see that as a real issue. The blue line is the S&P 500. The yellow line, or amber, whatever it looks like on your monitor, is the emerging markets. Those are the third world countries. The green is the the world except for the U.S. So you can just see, without the U.S., this world is just kind of humming along not so well. The U.S. is what's making it strong. And on the right-hand side, these are the G7 nations. And I want you to pay particularly strong attention to the 2 countries on the right. Yes, Canada. Okay, now this isn't saying their GDP is higher than than Japan and Germany, because those are actually second and third behind the U.S. when you consider G7. China, of course, would be second and Germany third and Japan fourth after that. But If you just look at the G7 nations, clearly the biggest percent change is the US, followed by Canada, and that plays into the art of the deal, which we'll get to later in the program. The Magnificent Seven continuing to rock. They're the yellow line in this case, the 180-day moving average, so they stayed above it. They're very volatile. You guys that are trading DS, discretionary strategies, know that it's a very volatile program. 10-year U.S. yield, if you're thinking you can get successful in bonds, you just cannot do it. We do have some bonds in our GI program, but not that much. Mostly we are in equities, and that is why. If you look on the right-hand side, I want you to look at the European Union growth rate from 2000 to 2024. You got a blip down in 2008-9, and you have a blip down in 2020, and then a big rise, of course, when the recovery happened. What has Europe done during this time, except for Ireland? Okay? Nothing. Nothing. Why do we mostly invest in this country? I would love to be able to diversify, and I do when I find different ideas. Like, for instance, if you're in CG and you get your statements, you see, well, gee, we've got this ETF from Israel. We have an ETF from Argentina. Yes, because they're performing great. All right. But the mainline countries are not, and that's because we're whooping them. 2024 performance. This is the last time we'll show you this. CG finished just under 30% and lost that 30% handle just the last 3 days of December. Kind of bummed me out. But if you look at the blue line, that's CG, the benchmark account, of course. So those of you that were not with us for the entire year, remember, you're not going to have this performance. We had 27 clients return to us from LPL last year. So now you guys should be seeing exactly the same performance, all right, that I have, all right, starting this year, January 2nd, when the market opened. So again, CG just killing it with only a 5.3% drawdown too. Not bad at all. If you look at the stats on that, the biggest profit, 11,500, biggest loss, 2,800, profit to loss ratio, 2.85. That's the closest I've gotten to sustaining a 3-to-1 profit to loss ratio. Return percentage in the bottom, I kind of highlighted it maybe too much because it's hard to read, but basically the win, I got up to almost 40%, 39.1, but a 40% win rate is really high in the industry, usually between 33 and 37 for the kind of trading that I do. But we did well in CG last month. If you look at the winners versus the losers, I said last month, I meant last year. The winners you can see much larger than the losers. That's the whole strategy. We're going to lose more than we win. 60% of the time, according to the last chart, of course, we're going to lose, and 40% win. I don't think I can keep that 40%. If I get down even 35, 37, it's still a really good number. But our winners are bigger, and that's what makes the program work right now. So GI had a really respectable year. Look at its blue line. It was above the S&P for the entire year until May 23rd, and then it just couldn't keep up. I mean, it's not ever going to keep up because it's only 60% stocks and 40% fixed incomes and various short-term debt instruments and packaging, which I can tell you more about if you want to know. But anyway, it's a more tempered program, I guess. DS, great year, beat CG in the last month. So everything else went down, but people were piling into the Mag 7, and that's why, and then our AI stocks, and that's why the blue line's up really sharply there in December, whereas all the rest of the markets were down. Only had a little less than 5% drawdown, which is highly unusual for DS. So really happy with that result too. And if you look at the 7.5-year record, I mean, gosh, 370% over 7 years. The blue lines never really lagged, but it's had one really ugly drawdown. Not a fun time to be there, but again, if you're in it for the long term, that's where you want to be. I'm going to clear my throat again. Any questions? Put them in the chat, guys. Hey, Nellie from Atlanta. We got all over the globe today, or at least all over the country. So I mentioned earlier that the U.S. is clearly outperforming in economic growth all of the other G7. Second is Canada. Okay. Remember that I keep saying this. Second is Canada. Okay. Forecast for 2025, Canada actually a tiny bit stronger. Now the forecast doesn't mean it's going to happen, but the U.S. and Canada clearly leading the world. Now what this data doesn't show you is that if you were to remove the $208 billion in imports in the deficit between Canada and the US, they would be nowhere near that amount of growth. In fact, they'd probably be about where Italy is. Trump is aware of that. We'll get to that later in the program. All right. So what happens? And we've shown a similar chart to this, but I just want to show you this now. Who would you think that blue line is after a presidential election? You think it's Reagan? It's not. It's Clinton. All right. So those of you that are concerned that here this powerhouse Republican, I guess campaign is coming in. We have the presidency. We have the Senate. And when I say we, I mean we Americans have the Senate, we have the House, and frankly, we have the Supreme Court, pretty much a 63 split. So, but does that mean stock market success? Well, not necessarily. Look at George Bush down there in 2000. Gosh, he never even got back to break even. I'm going to see if you guys are paying attention. All right, so you see that white line drop there? That's Reagan. Why does that white line drop? He was actually keeping up with Clinton until, bam, just gone there. Type it in the chat if you know. Hi, Judy from Tennessee, Tom and Judy. Good to see you guys. We got about 7 or 8 states here. This is great. So glad you guys are with us, and thanks for adjusting your schedules. I will try not to miss another one, at least for 5 years, okay? But let me know why you think that drop is there. But the takeaway on this is, folks, don't worry about what political party has the House or the Congress. It's just not going to affect the market that much. It can affect the business climate. We'll get to that in a little bit. Monthly returns by the S&P since 2000. This is what we can anticipate. Now, if we go back to 1950, it's a different story, but this is 25 years now. So the strongest 3 months of the year are October, November, December, but followed by that is March, April, May. So January and February usually don't do much, and that's kind of how we started. We're already halfway through January. Can you believe that? All right, June's a down month. August is a down month. September is definitely a down month. Historically, doesn't mean it will be this year, but this is how we make adjustments for selection. So 2 of our clients, and this will get to the very final segment when I talk more about this, ask, how do I select stocks? This is one of the influencing factors. All right, I talk about the risk management that I have, the 1% risk. Okay, I'm not going to cover that tonight because it's in about the last 12 episodes of this show. I'm going to talk about selection tonight, all right? And one of the things that I do to select stocks to go in the program to adhere to our risk management strategy is S&P monthly returns. This is called seasonality. Word of the day, seasonality. S&P economic sector performance, really strong for consumer discretionary, telecom, which is really now renamed communication services, and technology. So the biggest 3 most aggressive sectors had the best relative performance year. And that is why the market did so well. You can see the other sectors down below that were all negative. And why is that? Because the trillion-dollar stocks are pulling the market along, screaming and kicking. I am hopeful that changes in 2025. We want to see every sector, even the utilities, even Procter & Gamble with toilet paper and aftershave. All right. We want to see all of that succeed uniformly. May not be the same step-in-step kind of growth that you're going to see from the technology and the AI stocks, but we want every sector of the 11 sectors growing. All right. That's how the economy sustains a long-term secular bull market. World growth, I think, still going to be below the long-term average. And why is that? I don't see anybody typing in the chat, by the way, on that white line. Nobody knows why that white line dropped. That was the crash of October 19th, 1987 during Reagan's term. All right, that was his second term. All right, that's why. So China just not growing. And so that brings down everything else because of the size of the country, the size of the economy. Biggest economies have embraced a near permanent state of fiscal expansion. That's a fancy way of saying debt. Just going to carry that debt forever. And eventually they're going to default. And if they don't have the backing of the US dollar, and there's only one country that has that, then they're going to turn into a third world country. And that's why this debt problem has to be solved. The problem is that Americans don't vote for austerity. They don't want to vote for austerity. They want stuff. They want more things. They want the government to give it to them. Now, I believe we have a more prudent administration coming in. We'll see. We will see about that. And they're not going to change anytime soon. So this Alberto Alesina and some other economists found out that a package of tax increases actually cost, let's say it's a 1% tax increase, reduces the voting share of the governing party by 7%. Don't you think both the Democrats, the Democratic National Convention, and the GOP know that? Nobody wants to hear about austerity, and yet they complain about the debt. Well, you can't have it both ways. Or can you? Is there a way that tax receipts increase? We're going to talk about that. Just stay with us, all right? Stay with us. So you guys know this chart. Last 100 years, 3 secular bear markets, 3 secular bull markets. Secular meaning multiple business cycles. These go on for years and years and years. The Great Recession, 2008, the crash of essentially the depression, the only depression we've ever had by definition, 20 years. 20 years. But we continue through this cycle. It began April 10th, 2013, when the S&P broke out of the top, the actual lower side of that blue arrow. And I think we're on tap to continue until probably 2033, 2034. And I see Fran typing national debt. Yes. So the national debt right at $37 trillion. And we're not the only country that has that. All of the G7 countries carry debt, and there are some that carry more than we do. But eventually it has to all get paid. It has to eventually all get paid. So year-to-date performance, and I've got a new graph here. This is a new piece of software that we've incorporated into our office. Really excited. This is from Reuters. Really expensive and really high tech, but you can see how CG is doing, and we can actually track it multiple time frames. We've got CG, GI, DS, all three as of today are beating the S&P year to date. Allows us to dig down into and find really good ideas for trading. I'm going to get to that in the very last section, and it might be geek speak for some of you, but I had 2 customers that asked with great specificity, another word of the day, how do you make your selections? We get this whole 1%, we get the stops, we get the ratcheting up, we get all that, but you still have to make selections, and that is true. So tell us how you do that. That's what I'm going to do tonight, all right? After we cover the salient items here. So you guys know we always end the first financial section with this. Only 19 companies have reported. So far, the financials are killing it. Oh my gosh, the banks. Goldman Sachs yesterday, Morgan Stanley today, just blowing it out the roof. Industrials at a 100% win rate. In other words, if they predict they're going to have a good winning season or a good tax earnings season, then still not quite back, guys. I'm trying to get there. 100% of the companies have met or exceeded that. All right. Or actually they've exceeded it because the met would be in the match column. So that's positive. Why is that? I think banks are thinking that regulations are going to be far more lax. We actually have a daughter-in-law in the banking industry, and they are warning them for lax I guess we'd say regulations in the big trillion-dollar banks. And whether you like it or not, it doesn't really matter, guys. This is just the reality that we're facing. But we're off to a good start. And I can't wait till the next show on the 13th of February to see where we are here. Probably about 250 companies will have reported by then. All right. Oh, my answer for the Reagan situation. Good. Yeah. National debt. That was actually the crash of 1987. So that was the only time the market, that the Dow lost more than 20% in one day. That would not happen today because of the circuit breakers. But good answer. Good answer. Thank you guys for paying attention. U.S. policy. Why do we talk about U.S. policy, especially since it's going to be half the show, more than half the show tonight? Because it affects us. U.S. policy. See, we hate politics. We all know that. And we've mostly got that behind us. Depending on your political aisle, you may not think it's behind us, but for the most part, we're going to have to deal with some politics because we have to have policy. Policy affects this country. It affects our lives. It affects taxation. It affects immigration. It affects everything. And all of that has personal impact, and personal impact has portfolio impact. You guys have those 4 P's remembered and memorized by now, right? Good. So here's the market reaction to Donald Trump's victory. Yeah. The S&P 500 loves it. Nobody else does. Now, what I want to point out to you here is this isn't just the Russian and the Iraqi and the Iranian and the Chinese markets. These are even the markets of our friends, because the definition of what is a friend is being redefined. I'll get into that shortly. All right. S&P 500 definitely outperforming everybody since November 5th. The first reason why Trump won, inflation was out of control compared to Trump's 4 years in office. You can see it on the chart. This is straight from LSEG data stream, which is from the Bureau of Labor Statistics. That right there, folks, there's just no other way around it. That's government data. Reason number 2, illegal immigration was out of control compared to Trump's 4 years in office. Look at George Bush, 2004 to 2008, and then the acceleration under Obama, and then it actually pulled back under Trump and then greatly accelerated under Biden. The voters said, we do not want that. Reason number 3, the 100 million plus voters that voted for Donald Trump see the advantage of the USA becoming an even more dominant player in the world's leading supplier of fossil fuels, eclipsing OPEC's reign. Look on the right-hand side. We already eclipse Russia and the Saudi Arabia and Canada. If you put Russia and Saudi Arabia together, they're still a bigger exporter, but that will not be the case 4 years from now. If you put the US and Canada together, we eclipse Russia and Saudi Arabia now. Oh, did I mention Canada and the US in the same sentence? I did. I continue. All right. Merger and acquisitions. If you lower regulations, it makes it easier for companies to merger. It makes the art of the deal come into play. That's what's going to happen now in post-Bidenism America. I believe there will be a fresh wave of corporate mergers. Again, doesn't matter if I want to or not. I'm looking for companies that are going to get bought out. We had 3 of those last year in CG. If you guys look at the charts on those, when they're trading, let me come back to the camera. When they're trading and they're ranged like this, and then the next day there's just a price stuck up here, and the next day it's just glued across the top. That's because it's been bought. And it's trading at the price of what was offered by the bidder, all right, to buy the company. And we're looking for those opportunities. It's a great way. And then once that happens, we're gone. We sell. We move on to the next one. All right. Still risk 1%, right? But we're looking for opportunities. So this gets back to the selection process that I talked to you about earlier and understanding it. Am I looking for home runs? I am. Do I make the whole portfolio home runs? I do not. Do I put home runs in GI? I do not. That's not the purpose of GI. I put them in CG and I put them in DS and World Matrix as well. So, all right. So Morgan Stanley predicting a 50% pickup. I think that that's likely. And they had a phenomenal earnings report too, based on the fact that I think just in general, the investing community is excited about what's going on in the banking world. I think this invites a significant increase in mergers and acquisitions. And here's the reason. The art of the deal. 8 languages, 1987's been out there forever. This more than anything else, again, it does not matter whether you like this man or not, or even think he's good enough for America. The truth is, he's in office and he's going to be a kind of president that we have not had in 100 years. And I will back that up. What do I mean by that? In 1803, type it in the chat if you know who arranged the Louisiana Purchase. 1803, that's an easy one. Don't Google it. You should know it right now. Put it in the chat. Okay? Doubled the size of America. All right. And then we sent Lewis and Clark out west trying to figure out what's going on out there. 1867. Who was that? Who was that president? Louisiana Purchase was big, but the Alaskan Purchase was huge for many reasons. Now, you guys know about the Louisiana Purchase. You might not know too much about Alaska, so I'm going to tell you about it. Acquired from Russia in 1867 for $7.2 million. We got people on this call that are worth that. I mean, really? Russia? What were you thinking? Doubled the size of the U.S. and gave us additional access to the Pacific Ocean. Secretary of State William Seward got criticized. You'll see on the next page, Seward's folly, I should say. And Andrew Jackson signed this treaty on October 18th, 1867. So again, met with the Seward's folly, one of the greatest things to ever happen. Why? Because it ended Russia's presence in North America. Ended it. You think Russia would like to do that deal over again? Of course they would. Gold was discovered in the Klondike, and this was especially helpful during the Panic of 1893 when the drop in silver reserves caused a weakening gold standard. So back in those days before we just had fiat money is paper. What is paper money worth? It's worth what someone else says it is, all right? You can argue, well, gold and silver trades at X amount per ounce, right? $2,200 for gold and, I don't know, $2,120 right now for silver. But that's hard-backed currency. Would it be better to have actual backed-up bullion in the coffers, right? Well, Nixon apparently thought not, because he broke the gold standard when he was in office. That's another topic for another day, but that's what's going on here. That's one of the reasons why this was so important. But the biggest expansion, President James Polk. Who knows about James Polk? Nobody knows about James Polk. All right. He got this land from Mexico in the Mexican secession following the Mexican-American War, which they soundly lost. It includes California, Nevada, Arizona, Utah, parts of New Mexico, and effectively extended the United States to the Pacific Ocean. Again, now we have ocean access on both sides, including the Gulf of Mexico on the south side. I'm getting a little ahead of myself there. Sorry about that. So 3 of 4 borders, we have ocean access. That's a big deal, not only for naval, but for trade. All right. He oversaw the largest territorial expansion in American history. And in his single term, he literally reshaped the nation, fulfilling the American spirit of manifest destiny. This is not intended to be a history lesson. This is preparing you for the next slide. Welcome to the new America. It is my opinion that we will be expanding into these 3 areas in the next 4 years. I don't know exactly what it's going to look like, and it's too much to try to cover each of these 3, so I'm only going to cover one tonight. I'll cover Canada or Panama the next week, depending on what happens, not the next week, but the next month. And then in March, the remaining entity. Trump wants to be seen as a Polk, as a Thomas Jefferson. That's the answer to 1803, and as an Andrew Jackson, who he's admitted is one of his heroes. These are people that fundamentally expanded America for the betterment of international security, basically. And that's the way he's seeing it. So this is an article from Bloomberg. Greenberg's rare earth minerals make it Trump's treasure land. Looks like it could have been written last week, right? Look carefully at the date. 5.5 years ago, it was written during his first term, and Trump didn't get it done. Now, one of the hallmarks that I am seeing, and again, it doesn't matter whether you like this or not, I'm not so sure I'm that comfortable with it. I remember announcing on the last show that Trump's going to invite Xi Jinping to the inauguration. That is like no big deal compared to what's happened with Greenland and the Canada statements and the Panama Canal not ruling out taking any of these by force. I mean, it's crazy. It really, it's extremism that we have not heard in quite some time. But this is a vision of a president who sees what these other 3 presidents saw, in that for national security and for economic benefit, we need to look beyond our existing borders. You with me on this? This affects us as investors. I'll get to that. It's only going to take one slide. This is Greenland. I'm sure you've heard that Greenland is mostly ice and Iceland's mostly green. Greenland is the size of 3 Texases. 3. All right. A little colder than Texas most of the time. All right. Only one decent sized city, Nuuk in UUK, and it's where pretty much everybody lives. But there is a very large naval base at the top of the island. That is the Arctic Circle. And by the way, it's not Arctic Circle, it's Arctic Circle with 2 C's. The Pituffik Space Base is where we monitor all missile traffic, anything where something's coming to our hemisphere. And again, when I put that "my" on there, I think that certain people are thinking that our entire hemisphere is really ours to protect. Not just the United States, but Canada and Mexico. Not South America so much, but those 3 countries that are all in North America. But this Arctic Circle is one of the most burgeoning areas of activity for military action, trade action, etc. And Trump wants a piece of this. He wanted it back then, and now he's not going to stop. Why does it hold so much strategic importance to us? It lies along the most direct route between North America and Europe, providing unrivaled access to the Arctic region. It plays a crucial role in the U.S. deterrence efforts of both global and regional threats. Regional meaning what happens in the Western Hemisphere, which is our conclave, or North America even. It's ideal. Still trying to recover, guys. Its location makes it ideal for monitoring Russia and China naval movements in the Arctic. Let's go back and look at that map. The great thing about this location is it's just right there. Now, we have Alaska up there. You can't see it. It's off camera. But the only real presence we have in the Arctic Circle is Alaska. This would be an enormous gain, especially if it encompassed Canada, too. We need a bigger prominence in this bargaining area. Why? Because as global warming continues, inevitably, there will be more development here. Do I think that Greenland could support a population of 20 million? No. Could it be 3 to 5 million in 10 years? Absolutely. Absolutely, without a doubt, even if most of it's military bases, all right? Widely believed to hold all these natural resources: zinc, lead, gold, iron ore, heavy and light rare elements, earth elements, copper and oil, and most importantly, what makes our batteries? Lithium. Mining. So think gold rush to California with all of these mining companies coming in and looking for these minerals. Again, you might be a green person and don't want to harm the ecology. It's a pretty big island, 3 times the size of Texas, and nobody has put the R&D in. If the U.S. were to work out some agreement either with Greenland directly or with Denmark, I would expect that they would plan to put between $1 trillion and $1.5 trillion into Greenland, exploring it and developing it. So how does this affect us as investors? Defense stocks, companies involved in military and defense technologies will see gains, may see gains, they're going to see gains. If the Arctic presence is significantly boosted, mining and resource extraction, it's hard to even fathom the new technologies that are going to come along for mining and extracting these rare earth minerals and especially lithium. And it just could be just literally, they're going to have to put new harbors in and dredge out in Nook for these ships to come in, because it's going to be like the California gold rush. That's what I think. And I think that's what Trump thinks too. Maybe not so good for the local economy there. Danish companies and Greenland companies that are in place. I don't know. I think that the United States, if they work out some sort of deal, will want to see this country flourish. And I think that they learned from their mistakes with the Native Americans, frankly. And yes, this could be that all over again. That's what I'm seeing. And I think if we do it in a peaceable way, in a respectable way, there are just unbelievable opportunities for us. And again, I'm limited to just talking to you about, I'm going to go back on camera here, what's going on the investment side. I'm just calling it like I see it, folks. This man is out to be on Mount Rushmore. And again, that might just turn your stomachs. But that's what he wants to do. It took someone like Thomas Jefferson to have the courage, and I might have used a different word, to buy Louisiana, which was half the country. I mean, it became 50% of the country, or twice at the time. Same thing with Alaska. Same thing with James Polk. There is plenty of precedent for this in American history. Is this an opportune time in this world to do it? Donald Trump thinks it is. His election victory has sparked significant movements in financial markets. I think that this initial reaction, which I showed you in that first graph, has been largely positive. I think we're going to continue. We're going to have a strong year. The market's going to be digesting literally on a daily basis what comes out. I mean, for instance, I didn't even have a chance to put a slide in here. But now Trump's saying we're going to have an external revenue service. We've got an internal revenue service and an external revenue service, because we're going to create an entity that collects all the tariff revenue. and then we're going to apply that to the deficit and other things. It's too complicated to go into right now, but literally every single day there could be something coming out, especially as the Doge kicks in, right? The Department of Government Excess, and getting rid of that. I've never seen anything like this in the underlying tone and the VIX and the volatility. Market participants don't know what to expect, but I think deep down they believe this is going to be really great for America. And of course, I hope so too. I got to clear my throat again, guys. Let me see if there are any questions I missed. Hey, Deb from South Florida. How are you? Coming up on a big birthday. If you guys, I'll share your birthdays too if I remember them and know them. So tax cuts, Trump's going to try to get those continued, the 2017 tax cuts. We'll see if that happens. I think it will. International markets, you've already seen what I think there. U.S. stocks going to outperform, but we are looking for individual opportunities. So sometime here in the first quarter, let me go back on camera, you'll be getting a notice. If you've been with us for a while, so the new clients, all the ones that came over from LPL, and if you've been with us a year or so, year and a half, 2 years, 3 years, you've already selected every market to be able to trade stocks. But if you've been with us for a while, you may have only had U.S. stocks checked. All right, we're now trading all over the place. All right, not in CG yet, but in my own personal trading in what I called World Macro, Spec Op World Macro. We're trading on 8 different exchanges right now. We're going to go where we see the opportunities. If we can do it with an ETF, like if we buy the Israeli ETF or the Argentina ETF, which is in CG, there's no special permissions for that. But if I see an individual stock, maybe somebody that's mining lithium, that's got a patented on a process, and they want to sell it to the folks in Greenland, we're going to be watching this every day. All right, so be prepared to adjust your trading privileges at your Interactive Brokers account. I know not all you guys are clients, but those of you that are, you will need to do that. Europe and UK markets going to probably face challenges because their economies are not going to be able to keep up with what ours are. And deregulation, I've already mentioned this enough times, so I don't need to go through it again. Deregulation applies to many industries, but primarily the banking industry, okay? This is the real source of issues, and one of the many things that has Donald Trump so irritated. Anything below a 0 here, that would be every line, means that we have a trade deficit with that country. That means we export less than we import. Why? Because they refuse our exports, but they're happy to export to us, which means we have imports, which means our dollars are going out of the country into somebody else's bank. Now, you can see it's not terrible with the developed nations, but look at China. All right? Look at Mexico, the gray line, which is the one higher than that. I mean, this is the leverage that Trump is going to have, folks. It's like, no, we're done with this. We're done with these massive trade deficits. If you want to be an equal trading partner with us, we're interested in it. If not, then find another trading partner. Well, nobody else has the economy that we do, right? So now what are you going to do? This is the leverage. This is why it doesn't take military leverage. It's economic leverage. It's interesting to me that I think Trump is going toe-to-toe with our supposed allies. And in fact, look at the countries on here. This is NATO, all right? Not India and China or Vietnam, I guess. Well, okay, so I'm off here. There's a bunch of G7 on here, but also other trade partners. But the point being, Trump is saying basically, we're starting over again. Our friends might be our enemies might be our friends. Anybody that wants to work with the U.S. to make this a better place for us and a better world for everybody, we're interested in talking to you. So former friend or foe, doesn't matter. We're starting fresh, Jan 21, the day after the inauguration. So the exports to the U.S., don't try to follow all the little dots at the bottom because they're all fighting for a share of the U.S. economy. But look at Canada and Mexico at the top. 80% of their exports, 83% in Canada's position, Mexico's place, goes to the U.S. And on the right-hand side, you can see the same thing. Canada is actually more stabilized. They were worse back in 2000. But Mexico has just steadily risen to where 33% of their economy last year, and less now, because I think that they see the writing on the wall and they're looking for other markets. All right. This affects all of us as investors because this flow of imports and exports means certain international companies will succeed and others will not. We're looking for the ones that will succeed. So that's why I'm following this news so keenly about the adjustment of the world economics, the influence of the dollar on all these other currencies because trade affects all of that, and the geopolitical situation, which could bring Greenland, Canada, and maybe back into the Panama Canal, and how will that affect trade and the free flow of goods and services in the Western Hemisphere. All right, guys, I didn't make these labels up, but Trump put these on a graph and said, here's how I see NATO right now. We've got the freeloading cowards, and there they are. We have the freeloading but brave, and there's only two countries there, and those are both the Balkan countries, two of the three Balkan countries. Underneath that's Lithuania, Estonia, Latvia, and Lithuania. Generous and brave. So that's the highest commendation you can get from Trump. And then you've got generous cowards below that. All right. So if there's anything that could be more clear than that if your relationship with the U.S. is not about reciprocity, you're going to have problems. No more is the U.S. going to continue to pay the way for Europe to protect themselves. If you need protection from Russia, you have to pay us for it. If you want to give us land in exchange for that, you can do that too. I mean, everything is on the table here, folks. Everything is on the table. So I think that the Trump administration's focus is going to be on counterterrorism. I see that that's certainly a big area, certainly ISIS, although he pretty much wiped them out in his first term, but now we're seeing them come back. Obviously, the escape from the countries in Asia where we have had bases and then pulled out and withdrawn, it's just not good. The Afghanistan withdrawal was awful, and he's going to go in and right that, I believe. Whether that's going to affect us as investors, I don't know. Sentinel-1, we interviewed one of their engineers, had a really good interview. Guys, go back and watch that if you haven't seen it. But large-scale security firms look to be a really good investment as international internet security becomes even more important. So I have a new image here for the Fed. I'm going to clear my throat again, look for more questions in the chat, get a sip of water. And which police song do you think of when you see this new graphic I have for the Fed? Write it in the chat. Which police song, hint, hint, 1983, do you think of when you see this new picture for the Fed? Okay. Every breath you take, every move you make, every rate you cut, I'll say with no buts, I'll be watching you, Jay Powell. That's Donald Trump. So every single meeting they have, Trump will be watching over his shoulder because Trump wants the Fed on his side. Not supposed to do that, but that's what I'm seeing. I'll be watching you. Very good, Billis. You got it. All right, 2025, global economy be in a much better place than at any time since the outbreak of COVID-19. I think it's going to be solid, but not extraordinary for the reason I mentioned earlier, that China just isn't going to see that six handle. All right, 6%, 7% growth, which exceeded anything else in the Western world. They're just not able to do that after 10 years of doing it. Ideal conditions for the central banks to lower interest rates, but they won't do it if they continue to see the government's inability or unwillingness to reduce the huge debts, because the debt hangs over you. Yes, Dr. J, I'll be watching you. Okay. Fiscal stimulus, I think we're going to see the Fed do what they do less. I think that it's possible we're going to have 1 or 2 rate cuts next year, not 3 or 4. A lot of that because of the PPI information that came out Tuesday and CPI yesterday. Very strong, showing that the economy really isn't straggling at all and doesn't need the additional help of rate cuts. That doesn't mean the market doesn't want rate cuts, because it's better for corporations and their balance sheets and their income statements if they're paying less for interest. Duh, that makes sense. I mean, they're expanding by using interest rates and loans, but they want to pay less for that. So we'll see where this trajectory fans out. But for 2025, I think it's going to be right around this 4.5, 4.75 range. The market is still expecting rate cuts next year. I don't think they're expecting as many, less than 40 basis points, which would mean if you had 225s, that's 50, but then you have a smaller percentage of people saying that. So we'll know as we go through it, but I think the market is now built into the formula that they're just going to have to do it on their own. So historically, inflation has risen roughly 6 months after the first Fed rate cut. It has not done that yet. We'll see what happens in this current cycle, but it's certainly possible. And if so, then we just won't see any rate cuts. But that does not mean that if there's enough happening in the economy that it can't still succeed. So what are the benefits of the Fed's policy? Actually, there are many. I know that Trump makes a big deal about not liking Jay Powell, or maybe doesn't think anything of him personally, but just doesn't like the way he's handling the meteoric rise in interest rates, and then had to basically do the same thing on the downside. So gradual return to historically normal interest rates, meaning like 3.5% to 5%, all right, 4.5%. Labor market support. Fed obviously has double mandate of maintaining maximum employment and low interest rates. They're focusing now on employment, which they don't talk as much about interest rates anymore, and that's good because it means they think in the long run, maybe a PPI or a CPI report comes out that's hot and they don't like that, but they're not going back to rate hikes at any time, in my opinion, and what I see. So, guys, so you're used to me talking about performance here. I really want to focus on something different in my last 5 minutes. Had a few people, 2, maybe 3, that just said, how do you pick stocks? And what are you looking at when you do that? So we use this desktop terminal by Reuters, and it's definitely extensive. One of the most expensive pieces I've ever had, right there with the cost of a Bloomberg. But what it allows me to do is track in real time how we are doing versus various sectors, and how my choices are doing versus the S&P 500. So this is from today, actually, and I grabbed this, slammed it in here. Look at, that's my account number. There it is for the world. And there's the S&P 500. So with the sectors that I chose to focus on, we actually outperformed the S&P today. And you can see that because the blue is higher than the orange. The little blue line is CG for the day. And on the right-hand side, it's CG for the year on the left-hand side. So even though we got behind because we had a stock that just had horrible earnings, oh my gosh, actually dropped more than 1%. For the first time in years, we've had a stock down more than 1%. It's now way above that because it had a 36% gain just yesterday. But again, we have these mercuric stocks in there, folks. They're not all that way, but we're looking for something that's going to get bought out or has just, widgets that are just in crazy demand, like for mining and other places like that. So there are 3 components in the lower left-hand corner. There is the allocation effect, the selection effect, and then the currency effect. So every time I buy a stock and it is compared to the S&P 500, I want to beat the S&P 500 with every single asset that I have. Okay? So the way I do it is this. I look for something that if I select it, it's going to be better than the average stock in the S&P. That's called the selection effect. The allocation effect is picking the correct sector. Obviously, I can't change the sector of a stock, so I would only pick a stock in a sector that's working. And if it's picking a stock in the UK or on the Kospi in Korea or on the Topics in Japan, then I could have a currency benefit from it as well. So all of those components go into making the overall, am I beating the S&P 500? On this day, I did. You can see because of the pie charts over there. I know you can't see everything on this screen, but I just want to bring some columns to your attention. So these are the 13 stocks that are in DS. I can check every day to see what the portfolio weight has changed. So if a stock does real well, for instance, Arista Networks went from a 9.92 weighting. If you look at that column that says yesterday portfolio weight, let me stop this ringing coming here. You'll see that was 9.92, but today it was 9.90. So it had a really good day. All right. It allows me to look at what the allocation effect is, the selection effect, meaning the actual stock, how that's helping me in my quest to take on the S&P 500. And we do this for each portfolio. It takes time. It takes a lot of time. All right. Further analysis here, just going through, looking at the total return of CG for this day. Okay. The selection effect. So I looked at all the different stocks in here. You can see IonQ, which, was up 5.4% on this particular day, 31% yesterday. What I really like is more green on the actual account on the left-hand side on the far chart versus the S&P 500, which had a lot more red. It means that I'm avoiding losing sectors and focusing on winning sectors, and I'm avoiding losing stocks within those sectors and focusing on stocks that are within sectors that are winning. Wouldn't it be great if I could do that every day? It's really hard. It's really hard, but that's what we're trying to do. And that's how it works. That is how it works, guys. So this is everything that we have for the program. All right. So you've got U.S. policy, covered that extensively. Obviously, the art of the deal. I hope that makes sense to you now. Again, it doesn't matter if you like the guy or not. Donald Trump wants to be viewed as an expansionist president. That's what he wants. So we'll see how that takes us. Follow me on my podcast, all right? Apple, Amazon, Spotify, I'm there. Usually Monday morning we post a new adventure, a new episode, and it's something that I didn't cover during the week. So I hope that is something that you'll do. Check out. We will be back. I don't know why this says Thursday, January 9th. This is the wrong slide, but trust me, the next show is February 13th. That's 4 weeks from tonight. All right. And just in case you thought I forgot, I did not. The U.S. will turn 250 years old next year on July 4th. The 250th anniversary of something is called its semi-quincentennial. That's not right. Semi-quincentennial. All right. Word of the day. The semi-quincentennial comes from the Latin word semi, meaning half, quin meaning 5, and centennial meaning 100th. All right, there you go. There's your word of the day. All right. Any questions? I'm only looking at this trouble saying the tiny print. And I hear you, friend. So I usually give a disclaimer, and I hope you're watching on a computer screen and not on a phone. There are only certain slides where I have to just show a lot of data, and then I just talk through the narrative. For instance, and I'll just toggle back through these. Like right here, you don't have to see all these numbers. What I want you to focus on is the columns at the top. And if even of those are too small, then just go back and look at it and listen to the narrative at the time. But this is basically a matrix that allows me to do a X-ray. There we go, X-ray on each of these stocks. And it tells me on a day-to-day, sometimes hour-to-hour basis, are you helping me? Are you helping me beat the S&P 500? Because that's my job. If you're not helping me, you're dead to me. That's what Kevin O'Leary would say. All right. We always finish with 2 Timothy. For we have not been given a spirit of fear, but a spirit of power, love, and a sound mind. At least I was given a decent enough voice to get through this tonight. I hope you guys can avoid this. It is not fun. And that's even with all my nutritional supplements and training and everything. But again, haven't been this sick since December 96 when I had to miss something else I was doing at that time. But hope you guys are staying healthy. It is going to be a fascinating, at least 2 years. I don't know what's going to happen after 2 years because we have another election. All right. But for right now, go back and look at that history section. I mean, right now we just say, oh yeah, we bought Louisiana Purchase, da-da-da. But at the time, do you think everybody was saying, oh, this is really cool? You know, we have the money for that, or we have the money for Alaska. No, it was called a folly. All right. Maybe Greenland's a folly. I don't know. They're going to work it out in real time. We've never had anything like this in our lifetimes. And I think it's going to be fascinating. I assure you from the investment side, I will be watching every move he and the rest of Congress makes. because my job is to give you the highest possible risk-adjusted returns in your investments. I will do that as long as I'm breathing. I will continue to do that, folks. If I missed anything, be well, stay well. Thank you, guys. Thanks so much for your kind words. I will see you on February 13th. God bless and take care.